गुड इवनिंग दोस्तों। सो आज का टॉपिक है स्टार्ट एंड फंड इट राइट. So whether you're thinking about buying your next real estate, maybe you're an investor, maybe you're thinking about buying your next condo or Airbnb or a property, or maybe you're thinking about starting a business. Maybe you're thinking about buying a franchise, or starting a new franchise, or buying some existing business. Or maybe you want to help your kids. Maybe they want to start a business. So, in all of those cases, you need to do two things. Obviously, one, set up a business structure, and second, fund that structure. So, I think we have talked about starting a structure many times. We talked about LLCs, S corps, C corps, um, sub S corps, and many different ways to structure your entity. Whether it's for real estate, for your business. So I'm not going to spend too much time on that. Today, I'm actually going to spend time on funding your structure because that is so important. Now, I know some of you guys are in LA, some of you guys are in Bay Area. I think a couple of you guys are in Las Vegas, and few of you guys are here in Dallas area. So, and some of you are, doing deals that are worth millions of dollars. I mean, I was talking to a gentleman just a few minutes ago, and I think he was working on an apartment building complex, and another one who was building flex spaces. I mean, these are all wonderful businesses. So I'm going to talk about some of the risk that you're taking unnecessarily. I'll talk about how you can avoid this risk, how you can structure things properly, and why is it important for you to talk to an advisor before doing all these transactions. So what I'm going to share with you today should help you uh, save you tons of money, and more importantly, help you feel more comfortable with your business. Imagine if let's say if you're playing cricket and you go in a cricket ground and you don't have any protection. Do you think you'll be able to play cricket with 100%? Probably not. Versus if you're properly protected, you'll be able to play it properly. So what I'm saying is, a lot of people own real estate, a lot of people have a business, but they're not protected properly. And that's why they're not able to really play properly. So I'm going to be discussing all of those strategies with you, all of those ideas with you. So, some of you guys are brand new, you don't know me. So, let me introduce myself. My name is Deepak, and I am a tax code advisor. I work nationwide. So, no matter where you are in the country, if you need help with your taxes, if you need help in structuring your business, you need some advice as to how should you structure your transactions, how to reduce your taxes, then I'm your guy. Just go to taxcodeadvisors.com and you can set up a free discovery call. I think many of you guys I already know, but I know some of you guys are new here. So if you don't know me already, best thing to do is connect with me via um, on Zoom call. So just set up a free discovery call. If you need consultations are always paid. So you have an option to set up a free call or a consultation call. So I'll leave that up to you. All right. Having that said, let's get started. So when we talk about how we're going to fund our entity, why is that important, right? I don't think many of you guys own multiple business. Does anybody remembers the last time you went to your advisor, whether that was your tax professional or maybe an attorney, whoever you went to, and and you said, "Hey, I'm going to start a business." Did anybody ever ask you, how are you going to fund this business? Where's the money going to come from? How are you going to structure that transaction? Did anybody talk to you ever about that? No, right? I mean, people don't talk about that stuff. Why? Because that doesn't really help them make any money. That's none of their business, right? So, look, when you fund your business, that is your first transaction. That is actually foundation of your business. That is going to set up the stage for the next transaction. First transaction is so important. We need to look at it from a business point of view. We need to look at it from your uh, personal protection point of view, your personal assets, could they be at risk? And we need to think about some strategies that allows us to minimize our risk and allows us to play freely in this game. And that is exactly what we are going to talk about today. So, like most of you are probably have some sort of business already. Maybe you have a real estate, or maybe you have some sort of side hustle, or maybe you have a proper business. I know a couple of you guys have gas stations and hotel, motels. So what I'm going to share with you is relevant to all of you. So imagine you want to start up a new company. So you have an LLC at this point. Well, there are only three things you can do with it. Number one, you can put money in it. We call it contribution. You can also, I said money, but technically speaking, you can also contribute real estate. You can contribute crypto. You can contribute gold. I mean, you can contribute other hard assets. So I shouldn't really say money, but I think most of you guys probably either put money or real estate. So I'll focus on those. The other thing you can do is you can take a loan and you can fund it with that loan. Some of you guys might give a personal guarantee for getting a loan. For example, maybe you're buying an Airbnb property, or maybe you're buying your next rental real estate. In that case, you need a loan, and that LLC will be part of that loan. So that is possible. And third thing is you can get investment from others. You can ask your cousin, your family members, your friends for money. So today I'm going to skip this third option. I'm not going to talk too much about investment by others. That's a topic on its own that can take a couple of hours. So I don't want to get into that. But I will leave it at this, that if you're starting a new business or you're buying a real estate and you're talking to people about investments, then you need to really get proper advice. You need to talk to somebody and figure out, is that the right thing to do? And if so, how should you do it? So I would say that's a big no-no for most of us. So I'll leave that alone. I'll just kind of focus on contribution and loans for today. Now, LLC can be a single member or multi-member, so that's not important. It could be either way. And if it's a single member LLC, then obviously whoever the member of that LLC can fund that particular LLC, and he will record that entry as a member equity in the LLC books. So I know I can see some of your eyes. What the heck is LLC books? And you're right. Oftentimes, when people come to me and I'm trying to do some cleanup work for them, I'll ask for their LLC books, and they give me the same eyes. They have no clue what that is. And imagine if your LLC gets sued, and and you were asked for that book and you don't have it. Do you really think that LLC going to stand up in court? Now, once again, I'm not trying to give you legal advice. I'm not an attorney. Just want to make it absolutely clear to everyone, I'm a tax advisor. And for that matter, anything that we discussed today is actually not a tax advice either. So just use this information for informational purposes only, please. I don't know you. I don't understand your situation, so can't comment on that. All right. Um, that needs to happen. If you are a multi-member LLC and there are multiple members, then each one of those members can contribute to LLC as well. That's why when there are multiple members and people want to form partnership, I usually like them to go through a detailed conversation on partnerships. I like to have a conversation with each member, make sure they properly understand, what they're getting into and what strategies available for them. Just to make sure that everybody is clear. You don't want to be surprised after spending so much money into an LLC and you realize what you're on hook for. So anyhow, that is what the contribution is. So in simple words, we set up an LLC. Let's say we are opening up a sports complex. Four of us got together. Each one of us put $100,000 each. We got $400,000, and that would be our contribution. And we will record that as a members' equity on the LLC books. Some of you guys already have an LLC and you don't have LLC books, then I'll strongly recommend that you get that done. Extremely important. All right. Now, the cool thing about contributions is that it's a very simple process. It has almost, very, I shouldn't say no paperwork because you do need to record it, but it's very, very low. I like it for small businesses that don't have any kind of risk. Uh, you know, those are the businesses that are good for. So one thing you need to understand, And you will be surprised. I don't think many people know this. When you contributed a capital to anything, whether that's for your rental real estate, whether for your business, that capital is unprotected in lawsuits. Meaning, you as a member of that LLC will always get paid last in case of liquidation. That means everybody will else will get paid before you. So imagine if if you have $1 million project and everybody is putting $100,000 in it. Um, is that the right thing to do? Because now you have that $1 million equity sitting in that project, and if something goes wrong, you'll be the last one to get paid from that project. Don't you think that's kind of stupid? Um, and I know some of you guys have done it, so I'm not calling you stupid. I'm just saying the transaction itself is stupid, right? Because why are you leaving this money on the table for somebody to easily grab? That's what I'm trying to say. So I know some of you guys are already raising your hand, so please hang in there. We can have that one-on-one conversation. I just only have limited time, so just want to make sure that you guys have all the information, and then we can discuss it a little bit later in private. Uh, can we fix it? Yeah, absolutely, we can fix it. That's not a problem. We just need to better understand your business. All right. So another problem I see oftentimes is that people, when they're contributing, they will transfer funds from their one business or from their real estate entity into another entity. Now you're jeopardizing two entities. That's another big problem. The best thing to do is always contribute funds directly from your personal account, because if you're going to leave that money at risk, at the very least, I would like that liability to be limited to that amount only. That's why I said avoid transferring from other businesses. So some of you guys who owns multiple businesses, multiple real estate, it's easy for you to do that because that's where your money is, right? Oftentimes we don't transfer funds to our personal account because of tax reasons. Now that's a whole different topic. I know some of you guys are going like, well, wait a minute. If we do that, we get taxed and all kind of problems. Well, we deal with the taxes separately. I'm just saying right now, I'm talking really about from a asset protection point of view, that when you're funding this and you're transferring from your business directly into this new LLC, now you're jeopardizing both businesses. And third thing I will always recommend is document, document, document. So important to have proper documentation. That's why when there's always more than one person involved, I always like to involve an attorney. Even though I guide people, I educate them how to do it properly, but I still like to involve an attorney just because I want to make sure that documents are drafted properly. So many times I see partnerships and their documents are a mess. They get it online or they don't really iron out all the issues, and their documents do not justify what they're trying to do at all. So if you're more than one, we really need to look at your documents. And I know some of you guys are going like, what document? I don't even have an operating agreement. We don't have a partnership agreement. We don't have a buy-sell agreement. We do not have a succession plan. Again, don't get me started, but you get the point. Extremely important. All right. So what's the second strategy other than that? What's second strategy is to loan money to your LLC. So LLC can borrow funds from their members. They can borrow from one member or multiple members. You can even get funds from a third party, maybe your brother, cousin, sister, and so forth. One thing to remember is if you're going to borrow funds, you got to make sure you pay some interest on it. Not some, the reasonable interest. Let's just put it that way. Because if you're borrowing funds without having an interest involved, then that becomes a bad transaction itself, and that's not going to look good. So again, proper documentation, have a promissory note, have a loan agreement, and if it's a real estate, then you need to also file the deed of trust on it as well. What that means is simply meaning is if I am giving a loan to your property, then I need to also record a deed of trust on your property as well. That is letting everybody else know that I have a loan on that property. So I like this strategy. It does two things for me. Number one, it provides me a little bit of an asset protection. Actually, if you think about it, not a little bit, actually quite a bit, really, because that LLC is going to limit the liability within that company. So if something goes wrong, the most somebody can do is go after the assets that LLC has. But if I have a loan against that LLC, that means I get paid first before somebody else get paid. So it protects my interest in that LLC as well. So this is a great strategy. Now, one problem that comes here is that if you just give a loan, so let's say you have an LLC and you loan money to yourself, that means to your LLC. In case of a major problem, the other side will try to make a claim that there's no difference between you and the LLC. It's the same money. So even though you're loaning it, you should not really have any rights to it because technically speaking, that is not a loan, that is a contribution. Um, would they be able to prove it? I don't know. That depends on circumstances. But one way you can have a better chance of fighting it is you don't loan it from yourself. You can loan it through another entity. So we set up an entity, perhaps in another state that nobody knows who owns, and it also have a charging order protection, so that in case even if they find out and they still try to go after that entity, they can get the money out of it anyway, and that entity loans the funds to this entity. And that's another conversation I like to have with all the partners so they clearly understand how that works. Otherwise, this whole thing kind of get messy as well. So the idea is we have one entity. That's the entity we are going to fund because nobody can really go after it. Meaning they cannot take the money out of it. They cannot find out who owns it. Those members are hidden and so forth. And then that entity funds whatever venture you're doing, whether you're doing a loan, whether you're doing a business, that money is coming from that entity. Sometimes that entity could be, multiple for each partner. Sometimes we can just have one entity. It just depends upon how we want to protect the interest of each person involved in that transaction. So I give you a simple example. Let's say we're buying a real estate and maybe the real estate is, let's say, $1 million, and you wanted to fund that $1 million. I know many of you guys are probably going to get a loan, but just play with me for a second. That we want to fund it all cash. We want to buy the property 1 million. Why? Because we borrowed those funds from another property. So you had a property in San Diego and you took a loan on that property, and now you want to fund this another property in I don't know, let's say in Dallas. Okay. Um, or that could be a gas station, that could be a liquor store, that could, the asset could be anything. You get my point there, right? So now what I'm going to do is, out of that $1 million, maybe I will actually do my personal contribution for, let's say, 40 or 50,000, a small amount, and rest of it I will fund to another LLC. And from that LLC, I will loan money to this new business venture. So that's how I will structure that transaction. This will give me the asset protection I'm looking for. It will create a paper trail. And most importantly, it is also going to guarantee that I'm taking at least some sort of income off the table every year in the form of interest. Now I can take that interest and I can invest it in something else. And that's another great way of building wealth. So that's how I'm going to structure that transaction. So basically, what we have done is we now have secured creditors, which is obviously you because you own the LLC, and we have protected our contribution uh, in case of any kind of lawsuit. So especially if it is a risky business, then I strongly urge you to reach out and set up a consultation, and let's talk about it in a little bit more details. And this strategy also makes it super easy for refinancing, right? For example, let's say you have a property and your one LLC has put uh, recorded a deed of trust on that property, and you want to go financing. You get a financing, and that financing will pay off to your other LLC. So your funds has gone into the protected LLC to begin with. So that's another cool way. Key thing to remember is always have documentation. You got to make sure you're making the interest payments. You got to make sure you have proper operating agreement. Make sure you're holding proper board meetings. From a tax point of view, we should also look into setting up a board of advisors and use some of the other tax strategy that might come in handy. So those are some of the basic things that you want to keep in mind. Now, like I said, some of you guys maybe want to raise funds from people who are not necessarily a member of your LLC. So if that is the case, then we need to have a whole different conversation around that, because that itself is a big topic. All right, so my time is up. So here's my information again. Just go to taxcodeadvisors.com and reach out to me from there if you're thinking about setting up a partnership, especially if you have a business that is high risk and that can put all of your capitals, the contribution at risk. If you have other businesses and you want to move funds from those businesses. So those are the reasons why you would want to seek out some help in here. So many times, guys, I see that people set up an LLC, but they don't fund it properly. And when they have an LLC, that LLC is missing proper operating agreement, missing board of advisors, missing proper tax strategies, or structured in a way that where people are just not able to optimize it properly from a tax perspective. So they're paying way more in taxes than they have to. So anyhow, that's what I do. I hope that kind of gives you an idea. I'm sure if you've been in business for a while, you probably have felt that nobody, and I'm sorry to say this because I'm in this industry, but almost, I shouldn't say never, but in most cases, these conversations are not happening. And honestly speaking, that's why I chose the company name as Tax Code Advisors. We see ourselves as advisors. Instead of having a transactional relationship, we like to have more of an advisory relationship with you guys, where we want to help you outgrow your business. So, whether you're a startup or you are growing your business or you're selling your business, we want to be with you at every step of the way. All my clients, I like to meet with them at least once or twice a year, if not quarterly. If you have a big business, maybe even monthly. So please don't hesitate to reach out to me for your new business, or for your partnerships, or for filing your taxes. I'm available. You have my WhatsApp number. You can get it from taxcodeadvisors.com. And just reach out to me. Like I said, the way I work is you have a free introductory call. You can set that up just from my website. And if you need consultation, you can set up an hourly consultation. Or if you have multiple partners or something like that, then do a comprehensive consultation where I will coach you guys as individual as well as all the partners together. And we'll set up the company, and we'll make sure that everything is done properly. All right, guys, thank you so much for spending your evening with me. So I know we have another presentation here, and after that, we will break out for snacks, and at that time, I'll be happy to connect with you guys and answer some of your questions. All right, once again, thank you so much for coming here tonight.